Here is a recap and keynotes from today's trading day in the QQQ. This yellow shaded area is today's pre-market action. You noticed our teal lines here as we marked yesterday's opening price, and here we have the closing price. We now move over to our current time frame. As a reminder, we also have our key levels previously marked in red. You also notice we already marked our pre-market low, our pre-market high, and one level which acted as both support and resistance. Now that we have our key levels ready, let's monitor price action. Just like yesterday, we see a quick break of the top pre-market level. But one key note to make here is the 5-minute candle closed under the pre-market high, which is not ideal when taking a range breakout trade, as we then immediately see the following candle drop quickly. But note, although the price action slightly broke our second support level, it quickly recovered and eventually tested pre-market highs again. But there's an important note to keep in mind here. When the day's price opens between the previous day's open and close range, you might need to prepare for a choppy day. And although we eventually saw a break of the pre-market high, our key red level told us a lot today and played a big role in spotting a big resistance area. Check this out. This circle area here, does this look familiar? This is what's known as a potential triple top, a commonly known and key bearish pattern. Notice the triple top is sitting right at our key red level, which played out perfectly today. Maybe you began to notice another pattern setting up. This pattern happens to be one of our favorites and also commonly used among pro traders, the trend line. Today's trend line turned into a real nice one, as you see the price action touch this trend line up to 4 times. Next, we'll place a resistance line at the top of the potential triple top in case the algos want to negate the pattern. With our resistance line in place, this shaped up real nice today, and now it looks like another common pattern many pro traders use today. Some will say this looks like a rising wedge or a bearish pennant. Either way, both are typically bearish and considered key patterns. To execute a trade based on this pattern, one should wait for a clear breakout either upward or downward. Today, we saw a clear break to the downside for our trade opportunity. We simply observe the price action and monitor our marked key levels after we take our position. However, there's also a very important note here. Due to rising geopolitical tensions, there was added fuel to the trade at the trend line break. Today, this turned into a pretty big trade opportunity. Each day will be different, however, and not all will show us 2 great-looking patterns. But these are normally what's considered an A+ setup. Recognizing patterns is a trader's edge. However, patterns will fail. Professional traders master their emotions and psychology, such as patience and discipline, as they await for these patterns. We hope you enjoyed this video.